Good morning. You're watching The Market right here on 18 Hour with me, Aisha Pariri, Nikunj, Dalmia, Avan Dabash on the show. And well, while yesterday it was a bit of a disappointing day of trade, the fact that we managed to close in at the session lows and even gave up that 18,700 print. But I think the good news is coming in from the southernmost part of the country, Kerala. Yes, you heard me right. And monsoon onset has already happened. And what can be better news for markets than this?
Yep. And the rain has started. When it rains, it pours in Bombay. It's one of those patches where we pray for the rain to come, and when it starts pouring, you say, rain, rain, go away. Yeah. But right now, it's about rain, please come. And there you go. The pictures of monsoon onset. So monsoon has officially hit the coast of Kerala. And the IMD believes that the monsoon progress is going to be accelerated in next 48 hours. So monsoon in Kerala means that it should reach Mumbai in next 5 to 7 days. And in case, ladies, you've not bought your umbrella, please buy it.
Already geared up. Avan even has gumboots.
Yeah. I actually checked the Google weather map, and there is a 50% probability of rain in Mumbai the entire next week. So
I really hope so, because we could definitely do with some respite.
We shall archive Aisha's statement that rain please come, because after 2 weeks it would be rain, rain, go away, it's pouring and it's raining. That's nature for you. Yeah. But yes, when it rains in Kerala, we all celebrate, and that's what we are doing today.
Yep, and we're just waiting for the monsoon to actually make its headway into the rest of the country as well. By the way, yesterday as well, we got a little bit rained out here in Mumbai, only because of the price action in the markets. Couldn't quite sustain that 18,700 print. Although the good news this morning is that the global market handover has been strong. If you just look at how US equity markets panned out, the Dow gave you a gain of about 0.5%. Similar was the price action across S&P 500 index. In fact, it was a bigger move for the Nasdaq, and that managed to eke out gains of a solid 1% or so. So, yep, while Trump indictment is on, and that's keeping most people busy, a bear market for the S&P 500 index clearly is ruled out, and the Dow Jones managed to post its third consecutive day of gains. Eurozone, though, has entered into a technical recession, if you please. But yep, the equity markets are singing a different tune even there as well.
We are 100 points away from an all-time high on the Nifty, and frankly 100 points for an index which is at 18,800 really does not matter. Yes, we can talk about the retreat post the credit policy, mild profit booking by institutional investors. So for me, yesterday's price action, even if you're a day trader, you should not read too much into it. Markets are surely headed higher. I think the concern on rain, at least monsoon delay, that is getting addressed. If the spread of the monsoon is accelerates in next couple of days, so that fly in the ointment, that chink in the armor, if I may use that, if I extend my English vocabulary with that, that also will get addressed. So I think in the market right now, there is definitely a degree of confidence because global cues and flows are strong. There is an element of FOMO which is visible in the way how the mid and the small cap stocks are moving, and there is a degree of comfort which now is going to come given where oil prices and commodity prices are headed. The risk for the Indian market always was that international energy prices are down, but local vegetable prices and fuel prices may not go lower if there is a risk to the monsoon. And I think that it's too early to judge that. And with monsoon coming around the corner, that also seems to be getting addressed. So if you look at the trader screen right now, I mean, that's important. It's important for us to point out that what was the tone and tonality of the F&O activity yesterday and what exactly the mood in the brokerage radar was. So global cues are positive. Net flows, you would say negative, but not alarmingly negative. And F&O positions, at least, were not all that great. So the market yesterday lacked any kind of a fresh commitment, but it's okay. I mean, just because you had a pit stop does not mean you are out of the race.
Yep, we missed that life high by just about 100 odd points, and we tested that 18,600 mark yesterday. But the other talking point as well across the globe is with respect to the US-Iran deal, and actually you have complete clarification coming in from the White House National Security Council saying that reports of the fact that US would give Iran sanctions relief to export oil in return for Tehran reducing their uranium enrichment replenishment is absolutely false. You had crude oil prices sliding as well to sub $70 per barrel. So continuing to see the demand concerns outweigh the tighter supply. That's what's happening when it comes to crude oil. But yes, of course, back home, Nikunj, the fact that you had the broader markets as well underperforming. The small cap index has been gaining for 15 straight sessions on the trot and now put the brakes on that gaining streak. So the fact that while we're looking at that life high print for the frontline indices, the broader markets have been supportive so far.
See, the small cap index is not close to its all-time high. And this is a number which it had hit almost 18 months ago. Nifty is 90 points away, 100 points, yesterday was 100 points away from an all-time high. The mid-cap index had already hit a fresh high. Even though the small-cap index has trended up very smartly, if you look at the last 15 days of graph, it is still 15% away from an all-time high. Which means that the market can still add weight, muscle, or even fat, because typically when you see these new highs which are made in mid cap indices and in Nifty and in Sensex, the small cap index actually has to catch up. And the P multiple of the small cap index is also not that alarmingly high that small cap stocks are very richly or there's a fraud there. So I think the market right now still, I mean, you'll have to work hard now, you'll have to treasure hunt now. That's the point I'm trying to bring out here. But I think in terms of a red light, in terms of something alarming, in terms of something which looks like a concern for me purely based on technicals, fundamentals and liquidity and valuations, I don't think even in the small and the mid cap space there is reason to get really perturbed or concerned about.
Okay, fair enough. That's the view coming in on the overall market. And yes, indeed, of course, that very close linkage as well with the monsoon, that continues to remain a critical factor. The fact that the IMD has gone ahead and said that they expect the monsoon to advance soon as well, and other parts of South India are going to see advancement after we did see those showers hitting Kerala. And of course, do remember the fortunes of the Indian economy are very closely linked with the southwest monsoon to track the trajectory of our GDP, given that agri-economy contributes nearly 20% to India's overall GDP. So it continues to remain fairly critical. But Aisha, the other talking point as well, the Kotak stake sale kept us all abuzz on our phones last evening.
Yeah, absolutely. And, I'm just looking at that. Canada Pension Fund is looking to sell that 1.66% stake worth about $754 million in Kotak Mahindra Bank. That is what reports seem to be indicating. And they hold, I think, about 4.3% equity.
Yeah, I mean, they were one of the early investors. They have really benefited by their confidence in Kotak Mahindra Bank. I think it must be more than a 10-year-old investment for them. Now, I think this is just pure profit booking, nothing else. The interesting bit here is that Kotak Mahindra Bank in this entire market uptrend actually has not really participated, and we were just a coincidence. Kunal and we were discussing this yesterday, that why Kotak is not participating. I guess somewhere markets knew that there was an overhang which was coming. And typically when a stock is underperforming and when there is a large block deal which goes through, then that really checks the overhang. What happens is that Kotak Pension Fund could have, Canadian Pension Fund, I beg your pardon, they could have been selling in the cash market, which they are not now. So that overhang, I think, is going to get lifted when this block deal is over. Also, to just point it out that, Kotak Mahindra Bank and Uday Kotak has gone on record and has said that, look, the succession planning is well in place. Markets maybe there's a bit of a suspense that, who is going to be succeeding Mr. Kotak's place in Kotak Mahindra Bank. But barring that, I don't think in terms of growth, in terms of the book value, in terms of the CASA, I think the franchise, is extremely strong. And the valuations which were 5 times book, 6 times book also for Kotak Mahindra Bank, that concern is also behind us. So my sense is that once this block deal goes through, the supply overhang reduces and the stock in a sense could rediscover its mojo.
And while we're on the subject of what's happening within the commodity market, I think it's important to highlight that sugar could be the key sector today, because we've already seen the sugar prices on Thursday night itself have rallied very, very sharply, with New York sugar actually posting a one-week high. Remember, it's the El Nino impact, which is going to cause a bit of a drought-like situation. And which is why, this is critical for sugar crops, and that's going to really lead sugar prices to soar. The last time this happened in Asia, at least, was back in 2015 and 2016, which had caused prices to soar. So the entire pack, the entire sugar cluster is something that you may want to look out for. It's the El Nino criteria here at play. But Nikunj, a very interesting chat coming up with Mr. A. Velumani as well, the founder of one of India's largest diagnostics chains. And then, what made headlines was his ouster as well.
I've interacted him in person for the first time after he actually exited. And to give credit to Mr. Velumani, he started Thyrocare with money he borrowed from his wife, his late wife, with a capital of 5,000 rupees. All he had an idea, which was that there are two Ds which need to be disrupted in India. The cost of thyroid, which was like 10 years ago more than 1,500 rupees, and the cost of vitamin D test. He came out and he actually disrupted the prices. And then, even though he's a first generation entrepreneur, he incubated this business, he exited. He exited at a price of 1,300 rupees. That time the P multiple for the entire Thyrocare industry, in the diagnostic industry at the peak of the COVID crisis was 60-70 times. So at the peak of the COVID crisis, he sold at the peak valuation, and after that all diagnostic stocks are around 50 to 70%. And guess what? He's buying diagnostic stocks now because he's finding value there. And he said, I'm open to come back to Thyrocare because I know there is a mess.
Yep. Okay, let's hear out a slice of that conversation, which of course is coming up later on in the show.
Today, state-wise itself, there are 100 players. They do take care of their balance sheet. Those who take care of balance sheet and pay tax are organized.
Good.
So today you find a good number of people in the dream of valuation. They are putting up a proper show. I think the industry is becoming organized, but the organized players are too many, and that makes the top players to struggle for their top line growth.
Hypothetically, now that you are an investor, you're incubating small businesses, would you be looking, if given a chance, would you like to buy and invest into diagnostic stocks?
I would love to buy diagnostic stocks to an extent of 5%, 10%. I don't want to.
Do you see value in them?
I think if at all somebody is not in a trading business and somebody is not looking for encashing next year, diagnostics is the right discipline to invest in. Healthcare will certainly one day be big enough. Temporary setbacks are an opportunity to get invest in. So, even when I exited, I did buy all my competitors' stock, including Thyrocare stock.
Okay.
But then to my surprise, what I purchased has again gone down another 30-40% down. But my bet is I would advise everyone to look diagnostics much more seriously now. If not, you will never be in diagnostics.
What a story and what a journey it's been, and clearly that is very interesting in the diagnostic space. Catch that entire conversation later today on the channel. But meantime, let's focus markets then, and we've got Kunal Bothra as well as Nooresh Mirani joining in on the show as always. Kunal, we missed that life high by about 109 points. It was a choppy session for the equity markets. What did you make of it?
Good morning, Avan. So yes, it was a choppy session for the index, and for the first time yesterday, there was a sign of short built-up coming into the index futures, both on the Nifty and Bank Nifty, even though it was a bit on the lower side, because just 3.5% rise in the Bank Nifty open interest, as well as 2.5-3% approximately on the Nifty. So that gives you an indication that in the market participants yesterday for the first time were just about in favor of expecting the markets to get into a bit of a corrective mode. The Nifty still managed to hold on to that major support of 18,400. So that is generally a good factor for the markets, that we can probably absorb the correction as now we get closer to that 18,400 mark. But the only pattern which on the technical front which has been formed yesterday on the index is a rising wedge pattern or an ending diagonal pattern now, whichever we look at it. So that generally is a point of concern, because rising wedge patterns are generally a a pattern which leads into a short-term correction and immediate correction on the indices. So we'll wait out for the next couple of days. If there is no major follow-through on the index, then we can probably expect that maybe this could just be a shakeout for the indices, and then we could probably be on the journey of making a new high yet again. But if there is any follow-through selling pressure for the index in the next two trading sessions, then we could probably be expecting 18,400 as a retest for the index.
Okay, there you have it. That's the view coming in on the overall index. Let's get in your take then, Nooresh. Given the fact that we wrapped up the session 0.5% lower, 18,634, what's the outlook in terms of the trajectory towards those life highs and sustaining around those levels?
So, in terms of the Nifty, I would be looking at it till the time it holds above that 18,400 to 18,500 mark. So, it made a bottom around 18,464 for this month. Starting this month, and say the other bottom is at 18,530. Till the time we hold above those levels, the momentum remains positive. It's only on a break beyond this can we go towards a correction mode and retest closer to 18,000. But till that point of time, I would continue to be constructive. And when we look at weightages, the heavyweights, we've started seeing a reversal in HDFC Bank yesterday. ICICI Bank continues to be at the higher end. Reliance Industries has not taken a crack. So what we've seen yesterday is a bout of profit booking in a lot of names which had done quite a big move over the last few sessions, but we've not seen a correction in the heavyweights as such. So overall, the bias remains positive. Want to be buying closer to 18,550, 600 zones with a stop loss below 18,450 and expect a move towards 18,800, 900 levels.
Okay, let's talk stocks. Kunal, what's the trend that you're going to be catching today?
So I'll still stick to the large cap names. HDFC Bank is the first stock which I would suggest as a buy. There were fresh signs of a mild reversal on the upside for HDFC Bank. So would expect the stock to have a follow through on the uptick. Targets of 1650, stop loss at 1600. Maruti is the other stock which looks very attractive. 2 days of consolidation correction already happened for the stock, and it's still holding on to a major support of 9,500, 600 zone. So would suggest a buy on Maruti, expecting targets of 10,000, stop loss at 9,500.
The markets are looking jammed, right? Nifty is consolidating. We missed the all-time high mark yesterday also despite the credit policy push. Does it make sense to buy an underperforming stock?
So HDFC Bank is an underperforming stock.
Yeah, that's my point. So if you are looking jammed on the Nifty, does it make sense to buy an underperforming stock? That's my limited point.
Yeah, Nikunj. So we look out for relative strength. So what happens is in a shakeout or in a very sharp correction, the sector trends change. So what we've been seeing over the last so many weeks is that small caps, mid caps, and tier to large caps, they've performed very well. My belief is that after that shakeout which happened yesterday, there could be a change of pattern where the underperforming large caps can make a comeback, like maybe the likes of L&T, Maruti, HDFC Bank, etc. So my sense is that it's now time to probably back those, erstwhile large cap names which have been actually underperformers.
What also reversed yesterday, Nooresh, was this entire NBFC space. Mahindra Finance, Piramal, L&T Finance. And I cannot find a fundamental reason why they reversed. But technically, is the party over for some of them?
The whole point is, yesterday was a day of profit booking in a lot of these names which had moved up quite a bit. So if you were to look at L&T Finance, the stock was at 80 in the end of March, start of April. The stock was at 107 day before this. So a good 25% move out here, 25-30% move done. And a 2-3% correction would be normal. Even if it goes towards 100, that would be a normal case. Mahindra and Mahindra Finance from 200 has gone all the way to 300 levels. So overall, what we've seen yesterday is the stocks which had done a move of 20-30% from the lows of March, April are the ones which saw a correction. For example, HDFC Bank, which has not moved up, was up yesterday. We've not seen a similar correction in other stocks which had been underperformers. So clearly, 1 day of profit booking, NBFCs as a structure, a lot of these stocks have finally turned around. And what is interesting is even after the move, when we look at a lot of NBFCs, they're still not back to pre-COVID prices. For example, L&T Finance Holding was at 125 pre-COVID. A lot of other names are still down 10-15% from the prices pre-COVID. So that's the whole point. Even after such a recovery, they've still not been able to go back to pre-COVID prices. So the view is NBFCs as a space, small finance, banks, microfinance institutions, all these stocks have now started making 2-year breakout. So this sector looks interesting, and this dip a profit booking dip would be a time you want to get into all of them.
Okay, let's get in those top recommendations from you as well. Nooresh, what is it that you're picking out for the day?
So first is a buy on ICICI Bank, which is jammed in this range of 930-35 on the lower side, 960 on the higher side. A very tight range, a classical flag formation, very close to the all-time highs. Expecting it to take leadership from here and break out into all-time highs. At current levels, it makes it a good risk-reward bet, wherein the small stop loss at 925, a target price of 1050 in the short term. Second is a buy on NTPC, which finally has come out of this range. It's given a breakout over the 180 mark, a new 52-week high yesterday, as well as a new all-time high on a dividend-adjusted basis. The trend finally seems to be coming out. In this case, I would expect a quick move towards 200, stop loss to be placed at 177.
Right, okay, here's Devida Mehra telling us what she's making of the markets right now, and more importantly, the sectors that she's avoiding.
One theme, of course, which I've spoken, I think, many times on your channel, because that has been the biggest overweight sector for us, right from now more than a year and a half, about 20 months or so, since October 21, which is capital goods and industrial machinery. And each quarter we think that is the story over, but our systems still like it. We have switched stocks and so on, but the sector as a whole, we still like our systems. Like banks, as I said, we'd be somewhat overweight. What we have added in this calendar year would be autos, auto components, a few construction stocks, a few pharma stocks. IT, we remain, I think, slightly overweight, not a hugely overweight, but slightly overweight. So that would be broadly and of course, yeah, not everything is a sector call. As in 2022, some of our biggest winners were ITC and Raymond's, which were not sector calls. In terms of what we don't like, you were talking of the refinery OMCs, so that sector still we don't really like. Real estate also we're generally still avoiding. Then there are some of these consumer durable paints, that kind of thing. I don't think that sector prospects are still very good. I mean, that might change as inflation comes down and all that. But for now, those would be probably the sectors that we don't particularly like.
Welcome back. Thanks so much for staying on with us. Let's keep it with stocks and news. What do you need to watch out for in trade today? Well, let's start off with real estate. DLF and Oberoi Realty will be in focus on the back of a report that's come in from Morgan Stanley from their conference. Now, Morgan Stanley believes that housing demand upcycle is going to continue for DLF and consumption remains strong for Oberoi Realty. Let's get in a detailed note as to why the brokerage is bullish. We've got Vamakshi here with the details. Vamakshi?
Well, yes, analysts at Morgan Stanley caught up with the management of DLF as well as Oberoi. Let's first look at some of the important takeaways that came in from DLF. Like you rightly pointed out, they're expecting housing demand upcycle as well as supply side consolidation to continue. In fact, they're planning to take a nearly 7-9% price hike in FY24. In fact, NCR is expected to account for nearly 75 to almost 80% of its sales. It is focusing on monetizing its land bank in Chennai, Chandigarh as well as Goa, and is also working on JDA opportunities in Mumbai. In fact, with this, they're expecting to be net cash surplus in FY24. Now, as far as their commercial portfolio rental business is concerned, in the commercial segment, they're expecting to double growth. In fact, that would be driven largely by escalation, higher occupancy as well as new asset creation. Their retail portfolio of nearly 4.5 million square feet is also expected to double over the next 4 to 5 years. Now, as far as Oberoi Realty is concerned, like DLF, they're expecting demand for large format houses to sustain. Both the Thane projects are expected to launch in this festive season, and this in turn would be followed by Sky City, which is the last tower, as well as Elysian, which is the new tower in Q3. They're expecting to sell the balance inventory of almost 65 units in 360 West at nearly 5 to 6 units per quarter as well. They are also in active discussion for a few redevelopment projects in Mumbai as well as in Gurgaon, while Mumbai continues to be a major revenue contributor, it is also targeting to expand in other cities, including Bangalore. Now, as far as the rental business for Oberoi Realty is concerned, Commerce Street as well as Borivali Mall are expected to be operational in FY24, and upon stabilization, both these assets are expected to generate nearly 1,100 to 1,200 crore rental income in FY25 to FY26. So, largely on the back of this brokerage note, watch out for these counters.
Okay, we will look out for those counters, but e-commerce is facing a slowdown in growth rate. People are gradually moving back to in-store shopping. That's the word coming in from Prabha Narasimhan, MD and CEO of Colgate-Palmolive India, in a conversation with my colleague Sonali Krishna.
So I'm going to start first with the Colgate hat and talk about oral care to start with. I think as far as oral care is concerned, there wasn't much that changed during the pandemic. It was a daily habit for most urban consumers. It continued to be and it continues to be post-COVID as well.
Sure.
What did change was obviously where you shopped from. Your store was closed, lots of things moved online. That shift, we are seeing a slow and gradual shift back to in-store shopping. As Indians, I like shopping. I think most Indian consumers like shopping, and it's nice to go into a store environment and actually make the purchase. So we are seeing a little bit of a movement back.
Even for a category like oral care?
Even for a category like oral care, and actually we are seeing the movement back into brick and mortar stores. So that's certainly one change.
So advantage kiranas, you're saying?
Advantage all direct, brick and mortar stores. Whether it be modern trade or it be kirana. So
and actually the reports have come out that e-com is slowly, kind of losing its fizz, slowing down. Would that be accurate?
I think the rate of growth is slowing down. It continues to be a very fast-growing channel, adding new consumers obviously to its base. But the rate of growth is slowing down for sure. And so I think that's really the shift as far as consumers are concerned. And I think the fillip that it has given to premiumization, as consumers come out of a couple of years of relatively being cocooned and relatively having less opportunity to do things, we are seeing a fillip on premiumization. It is gaining traction, even in a category like oral care.
See, your product is so embedded in my lifestyle, right, that I cannot do without it. I could do with others. No, happy, But the point is, I'm told that even then the penetration is so low because people still don't brush their teeth twice a day. It's, so, and this has been a problem for a while now. How are you trying to push this usage from 1 to 2 at least? Because that itself will be, so great in terms of your own volume.
Absolutely. And I think maybe I'm just going to step back a little bit and say that, Colgate has been in this country for 85 years. Through this 85 years, actually, as the market leader, it's worked on building the oral health of the country, first by getting toothpaste into every household. And now we have near universal penetration of toothpaste.
Across India,
Across India.
Wow.
Near universal penetration, which is absolutely fantastic. And supported, of course, by the Bright Smiles, Bright Future program, which teaches brushing habits and oral health habits to children in rural India. So we do find that children are usually the harbingers of change, particularly in rural India, and that's been a long-standing Colgate program that continued with a little bit of pause for the pandemic. I think the opportunity, therefore, for the company to grow lies in driving consumption.
All right, that's interesting, talking a little bit more about the trends for volume growth when it comes to Colgate India. Moving right on then, let's focus in on Macquarie's latest brokerage note. This is a bearish view coming in on life insurance players, downgrading some of the key players to a neutral rating. Why is that? Let's get in Ashesha, who joins in to put all of those details into perspective. Ashesha, what's the rationale behind Macquarie's call?
The entire life insurance pack will be in focus today, and that is because Macquarie has gone ahead and downgraded many of these life insurance players. They're concerned about the long-term prospects of the sector, and they believe that there is limited upside from the current market price. Looming regulatory risks is also a concern. They say that near-term catalysts are missing and valuations support limited upside from the current market price. They've cut their VNB multiples sharply, and they've gone ahead and cut their target price for many of these players anywhere between between 15 to 17%. They've downgraded HDFC Life, ICICI Prudential Life, SBI Life to neutral from their earlier outperform rating. For HDFC Life, their revised target price now stands at 556 rupees per share. For ICICI Prudential as well, they've downgraded to neutral. The revised target price now stands at 486 from the earlier target price of 580. They say that unless growth picks up meaningfully, sector performance could continue to lag. Important to note that that insurance sector has underperformed Nifty 50 by nearly 13% in the last 12 months, and they expect this underperformance amongst this Nifty stock, amongst these insurance stocks to continue from here on. They believe margins have more or less peaked out, and they do not expect it to support VNB growth in this current cycle. So, at the back of this downgrade that has come in, all of these life insurance stocks will be in focus today.
Yes, Shesha, we leave it at that. That's the focus on life insurers. But here's what Dipan Mehta is recommending that you buy right now.
In any sector which you are positive on, if you go down the line, look at the tier 3, tier 4 or tier 3 or tier 2 companies or the mid-cap companies within that particular sector, then you will find that in bullish markets like this, those companies will tend to outperform the market leaders or the large cap companies within that sector. So for example, if you like the NBFC space, then companies like Cholamandalam, MFI companies like Spandana or Credit Access, Poonawalla Finance, I think Awas Finance, these are the companies which will tend to outperform the larger ones like say a Bajaj Finance or a HDFC for that matter. And similarly down the line, when you go to banks, I think smaller banks like IDFC First Bank, AU Small Finance Bank, to an extent Federal Bank, and even IndusInd Bank, they may outperform the ICICI Axis and Kotak HDFC banks. And that particular investment theme is true across many sectors. You can play it out. You can see it being played out in software, in pharmaceuticals, as well as in capital goods and engineering companies as well. So, I mean, there are many sectors which are in sort of a blue sky scenario, looking at good earning visibility. But within those sectors, if you go for mid-cap stocks, you can have them outperforming the index and the large cap peer group companies.
You've been talking about Sun Pharma. Just when the stock, got occupied center stage in terms of momentum, yesterday's crack is actually quite unnerving.
So Sun Pharma has gone out of radar. Say the last time it broke out about 950. It barely made a move to 1000, 1050 and just paused for the next 2-3 months. Even now we've come back, we went back to 940, 950, back to 1020 day before, and it takes a 3% crack. So overall, it is holding on to that support area of 940, 950, but the momentum is lacking. So, and that is the case with most of the large cap pharma names. It is the beaten pharma names which are doing well. So you've seen continuous momentum in Aurobindo Pharma. Lupin, the charts look more constructive. We are seeing a lot of moves in the smaller names. We've started seeing something like an Natco Pharma, Alembic Pharma, say Ajanta Pharma. They're all making moves. So the view is to avoid the large cap pharma space. Start looking at the mid cap, small cap pharma space, which have fallen 40-50% from the top. And this is those are the places where the risk rewards are interesting.
Let's connect now with Mangesh Bhagan to understand the rally in cement stocks. It is such sustainable, or this is just one of those passing phases where cement is just realigning with the market bounce. Mangesh, good morning. Thank you for joining us. Mathematically, what are the numbers indicating? What could be the upside for cement companies largely because of the decline in coal prices?
So we have already seen the decline in coal prices for the past 2 quarters. And that decline is somewhere close to 150 to 200 rupees, which has happened till 4Q. And I believe for the next 2 quarters, another 200 to 250 rupees per ton decline is possible.
Do you think it's a good idea to buy into cement stocks just when monsoon has started? Because cement stocks, I'm sure, will underperform because of the monsoon and the fact that this time around monsoon is delayed. That means the current quarter and the coming quarter will be slow for cement stocks, cement demand.
So instead of looking at it just from the monsoon perspective, definitely monsoon actually has given good entry points in cement in the past. But I think FY24 as a year, demand momentum has been fairly strong. So the first 2 months of the fiscal, we have seen very good demand growth. And if the momentum sustains, I think pricing should remain stable and we could see some more improvement in EBITDA per ton. Definitely, the stocks have factored in most of the EBITDA per ton improvement, but I think the positive surprise can come from the demand growth that we are seeing on the ground.
The thing, Mangesh, also is, will the sector be able to retain the benefit of coking coal as well as pet coke price cool off, or do you expect it to get passed on to consumers?
Yes, so I think when the pet coke as well as coal prices were rising, the cement companies did not increase their prices. And if you look at the fourth quarter EBITDA per ton of the industry, that is close to 870 rupees per ton, even though likes of Ultratech really did 1000 rupees. So I think there is a scope for another 150 rupees improvement in EBITDA per ton. So what I'm saying is, if the pet coke prices go down beyond that, definitely that will be passed on to the consumer, and we do not see EBITDA per ton going up all the way up to 1200 and 1300.
Right. The other thing, of course, is right now, Mangesh, that while you are seeing a sectoral move, just purely in terms of valuation and the increasing competition and capacities in the sector, could you highlight which are your top recommendations within the sector?
Yes, so within the large caps, we maintain Ultratech as our top pick. And in the mid cap space is probably where, at least on the valuation front, there is more scope for increase. So there we like three companies. One is Birla Corp, second one is Nivoco, and third one is GK Lakshmi. So those are the ones wherein I think there is still some scope for multiples re-rating, and earning growth is also expected to be much better.
Mangesh, great to have you on the show. Thank you, as always, for taking the time out. Let's move on. Let's discuss what the market construct is looking like. And, IEX, that's going to be one stock which is definitely going to be in focus. We've highlighted as to how the sugar sector as well is going to be in focus this morning. And you've already seen New York Sugar posting that 1 week high. El Nino concerns clearly about whether or not this is going to bring a drought-like situation for the sugar crop and whether this is going to escalate prices or not. Sandip Sabharwal then on the show. Sandip, hi, good morning. You've been tracking the prospects of sugar pretty closely. Just wanted to understand what you're making of this surge that one is anticipating on sugar prices and how that's going to benefit the stocks here back home.
So the sugar stocks are reasonably priced given the fact that we are on the cusp of a potential upswing in domestic sugar prices, and the sugar company profitability tends to be very leveraged to that because all their costs are fixed. So every rupee increase in sugar prices effectively goes to the bottom line. So I think as many of the companies also indicated post the current year production data and the inventory situation, that prices from here on till the start of the next crushing season, October, November festival season, should trend up. And they have started trending up a bit also. So I think the next few months should be good for sugar stocks. The key we'll need to watch out subsequent to this and the start of the next sugar season is given that there are elections next year. What happens to the sugar cane advice price, etc., and that has an impact on profitability. So I think that's the small uncertainty which is there for sugar companies. Ex of that, the story looks reasonable.
All right, let's shift gears then and focus in on the stocks that are on the editor's radar today. We'll be discussing Voltas and Avenue Supermarts. Let's pull up Voltas first up because on a year-to-date basis, on the last 1 month as well, the stock has been exceedingly flat. And there is the latest report as well from Morgan Stanley saying that it will be difficult to return to the previous market share highs.
Interestingly, Voltas, despite we had an extraordinary surge in the summer temperatures in the month of Feb. We all thought that, okay, there is going to be a pent-up demand which would be there for at least the unitary business of Voltas. But the demand for Voltas, I think, is still flattish. They are not really able to live up to what the brand expectations are. I mean, it's a solid go-to brand. But in terms of their real translation into sales are not there. Now, is it because of unseasonal rains? Is it because they're losing market share? But the fact that if they expect growth of 8 to 10% at a time when we all know the big picture for India is that air conditioning is an under-penetrated category, electricity transmission has only increased, electricity availability has increased, we want more comfort from summer and unseasonal rains also. I think they are not able to create their magic. That's my limited point, that competition is heating up. They are a Tata brand but not able to live up to the expectation, and I guess markets somewhere are now really puzzled whether they should believe, wait, or they should not take a call that look, there is something wrong in the way the franchise is evolving.
Okay, that's the view coming in on Voltas competition clearly heating up. Moving on then, Avenue Supermarts, and clearly it seems that despite the kind of upgrade that you're getting from Motilal Oswal, for instance, there are still concerns when it comes to same-store sales growth for Avenue Supermarts.
So, Motilal Oswal has come up with a view that they feel that Avenue Supermart could go up by 18%. Now, 18% for a stock which is extremely richly priced and it is still trading at north of 40 times is not going to be, it may not really get a lot of value buyer on the table. My sense is that there could be a trading bounce in V-Mart and D-Mart, largely because of the base effect, same-store sales, new stores kicking in. These stocks have underperformed. Monsoon progress, the rural economy picks up, the value retail has underperformed as a category. If the inflation in fact comes down, then apparel business and the non-apparel business will pick up. So I will not rule out a deep swell, a trading bounce in some of these stocks. But beyond that, to make a case that a stock like Avenue Supermart could be part of your portfolio, I think at 50, 60 times, it's always difficult. The consensus is sell, but there are still 8 buys on D-Mart.
Yeah, so perhaps not for now look at it as a short-term play. That's the view coming in on Voltas and Avenue Supermarts, Aisha.
Oh yeah, Voltas, Avenue Supermarts. In fact, Sandip, on Avenue Supermarts, just wanted to understand where is it that you stand on this one, considering all that hype that it listed with, the amount of money that it's made for shareholders, and then the recent underperformance in the stock.
Yeah, so the initial run-up was based on assumptions of a particular amount of growth. Like people assume that the company will keep on growing at 30-40% with high margins forever. As the last few years have shown, the growth has moderated, margins have moderated, and in a slowdown, typically the value plays do better. But that also has not happened in Avenue Supermart. So I think at the current prices, stock is at some 80 price earning ratio, where earnings growth should be just around 10% not more than that, and maybe we'll see an uptick next year. So on what basis people are giving a buy on this stock is totally beyond me.
I think so. A sharpish tactical rally in some of these stocks could happen. Value retail as a category has underperformed, whether it is D-Mart or V-Mart. Inflation is fading away. Monsoon progress is decent. Rural economy is stabilizing. Could there be a tactical buy in a V-Mart and a D-Mart? Sandip?
No, the technical, or that comes into the technical category. So I think you should ask Nooresh or Kunal to answer that. But I think specifically V-Mart has some other issues going for it. I think it's in a bigger trouble. D-Mart is still a cash generating company. So if you have to make a choice, I think the choice has to be D-Mart, Avenue Supermart, but I am not buying.
On the charts then, V-Mart and D-Mart?
Nothing exciting. I think the last 1 year, 1.5 odd year, I think D-Mart has been going to a downtrend from 4,800, I think in mid of 2022 to now 3,500 with the stock is trading, which means a classic correction of more than 20%, 25% for the stock in the last 12 months. And the pattern of lower highs and lower lows is more consistent with D-Mart, and so is the case with V-Mart as well. So nothing exciting on chart. I would probably not look to suggest to buy at current levels.
The one key stock which got hammered yesterday was IEX. Let's just bring up yesterday's intraday graph for you, because it fell about almost 8% in the cash markets. Even in the last 1 month, it's down 15%. And if I were to take a look at the last 12-month move also, it's been a rank underperformer with a 26% loss on the stock. Yesterday, of course, it fell on the back of reports that the Ministry of Power has now directed CERC to expedite the process of decoupling, or rather market coupling, and that is what really sort of brought about that panic knee-jerk reaction in the stock. The Power of Ministry has now directed CERC to expedite the consultation, and it's the most trusted for electricity's spot price determination, and this sort of potentially negates IEX's moat that it had up until now. Sandip, what happens when, suddenly a whammy like this comes? I mean, of course, the stock falls, but for the shareholders, what do they do now?
Yeah, so I think that's the challenge always in buying into companies which are prone to government decisions taking away or bringing about huge profitability swings. So I think that's the challenge that all the OMC that stocks also face, and that's the challenge now IEX faces. So I think it's tough to say. I think people should avoid this stock because as it is, I think the performance of the stock always used to pick up during summer when there's electricity shortage, rates go up and then cool off. So in any case, it's a cyclical stock. And on top of that, if you have government intervention, then obviously the story becomes more sour.
Let's IEX in the spotlight, but in the meantime, let's listen in to some tough fundamental stock calls from Vineet Bulinchkar of Ventura Securities.
We are very, very bullish on Maruti. Our reasoning is very simple. Maruti has been a dominant player in the sedan category and the small car. But now they, after doubling their market share in the SUV segment, they're talking of doubling further their SUV market share to about 25%. So what happens is that not only is the revenue per car going up, but also the EBITDA is growing. And and because of this measure, we expect the company to maintain its margins and also continue to grow at a healthy clip. You see the couple of models which will be launched in the next 12 months. And after that, we will be seeing a blitzkrieg of EV model launches over the next, going as we go into 2030. So what you'll have is Maruti having a complete portfolio of vehicles, and with the refresh product cycle, I think they're very well set. But one point that everyone is missing out, and which can be a very big game changer, is the fact that in the small cap segment, Maruti is the only dominant player out there. And when you get EVs in that segment, they are going to have the lion's share because nobody has another model catering to the entry level segment. So I think, we are expecting a 50% upside on Maruti in the next 24 months. And if you just hold on to this stock, it will be one of the stack outperformers and could also prove to be a multi-bagger over the next 4 to 5 years.
Another stock which actually, let's go to Maruti and that entire Thar versus Jimny launch. And historically what I've seen is that whenever there are car launches, those car launches in the near term, they really tend to have an impact in terms of how things would move. Now that's Thar for you, off-road. Jimny, this is like the new launch from Maruti, 4-door off-road. It's going to be a completely different experience. I must confess that I've not taken either Thar or Jimny for a test drive, but that in a sense is going to be the talking point going forward. So Sandip, can Jimny be the game changer for Maruti? Everybody is saying that this is a new category where they're trying now to really extend themselves.
So I think we are seeing incremental improvements at Maruti from first being in denial 2-3 years back to the changes which is happening in the market space to adapting to that. And I think that's driving the stock price also. And I believe Maruti will continue to do well. So I don't see it as a challenge to M&M's Thar, but I think it should be a complementing product because the market share as it is low of these products, and as consumers sees more of these products, we typically see it complementing rather than having a cannibalizing effect. So I think to that extent, it's good for category growth. How this particular product does is something which is tough to predict, which because how the market will take it, we have to see.
Back actually off late is Hero MotoCorp, and Nooresh, has the tide finally turned for Hero MotoCorp?
Price action. For the first time in last many years, the stock is an outperformer on a 1 month or a 3 month basis. The stock has outperformed the auto index. The stock has outperformed the Nifty, and this is happening over after a really long time. The stock was available at 2,800 back in 2014, so it's almost 9 years of zero return. Only dividends have been the return, which makes the stock as an underperformer on various time scales. Now, if you look at the last 2 years, the stock was at 2,850, 2,900 as a resistance. In the last 1 week, we've taken out those resistances, and this indicates a longer term trend change. And we've seen what happens when such trend changes happen. The stocks, once they break out of a multi-year sideways period, they can surprise on the upside. So Hero MotoCorp looks very interesting. The view is such a breakout could ideally take it all the way to previous all-time highs. So that's the kind of outperformance which is possible from here. And in this case, if one keeps a stop loss at, say, the recent breakouts at 2,800 levels, the risk reward is interesting. The previous all-time highs are closer to 4,000 plus levels. The high for 2021 is around 3,600. So I expect a slow and steady rally in the medium term in Hero MotoCorp.
In a case that Hero MotoCorp actually could be the stock of the season. I mean, if you're of the view that this could go to an all-time high, very few stocks are more than 30% away from its all-time high, at least on the Nifty. And Hero MotoCorp is one of those rare ones, right?
Yeah, so looking at Hero MotoCorp could be a big surprise going forward over the next 6 to 12 months, even maybe the next 1 to 3 months.
Let's look at TVS. Ma'am, I'm bringing up TVS because TVS 2022 actually managed to hit out of the park. And TVS in last 52 weeks is up 73%, all because of they've gained market share and there is a promise of EV. But EV market in India, at least in the two-wheeler space, I think is growing, but it is still very nascent. Some of the electric vehicles in India are enjoying benefits of duty benefits. That in a sense is now going away. That could lead to repricing of the electric vehicles, especially electric bikes. So we need to be cognizant of at least that area. We'll try and see an excerpt of the chat with the management of Hero MotoCorp. But Sandip, here's a stock which has potential to make a comeback. I mean, it's been a lost decade for Hero MotoCorp, if you frankly ask me.
Yeah, I agree with that, and I think it's the same story on some of the, like even Bajaj Auto, etc. First, these companies were in denial about the EV moves, then they accepted it, and now my view always was that all these startups in the two-wheeler EV space, they will eventually not do well, and once the bigger players realize that this is what is the market trend, they will gain market share and they'll become dominant, and that's something which has started to happen. So, like Nooresh was saying, I would tend to agree that Hero MotoCorp incremental positives might be greater. It's an underowned stock now. So, and especially if the rural revival also plays out, then we should see Hero MotoCorp do better.
Meantime, let's also get in the take then from you, Sandip, as to what the outlook is when it comes to the entire real estate space. The Morgan Stanley conference really seems to be indicating that we're seeing a housing demand upcycle and we're likely to see supply side consolidation as well continue. They've singled out Oberoi Realty and DLF within this space. Would you concur with that assessment?
Yeah, so DLF was the first one to recognize that for a real estate company to have sustainable growth, they need to correct their balance sheet. They did it. The market did not reward them for a very long time. And now, once the sales pickup has happened, the stocks got rewarded and moved much higher. Oberoi Realty obviously is more Mumbai play, but they have also done well. But seems to be richly priced at this stage. So I think people should wait for better opportunities to buy into it. Overall, directionally, longer term real estate story looks fine. but after the near term uptake. So I think there's lesser value in the near term in most of these stocks.
Meantime, let's also get in a take then on the charts. And Nooresh, your take on the likes of the entire metals basket, the likes of JSW Steel were popping up on the gainers' radar yesterday.
So we are seeing some bit of a small momentum in the steel space, but the follow-up has been, say, very meek. So if you look at Tata Steel, the stock broke out a 3-month range about 110, 112 levels, but there was no follow-up yesterday. JSW Steel did make a breakout move, but again pulled back from the highs of the day. So the problem continues to remain in terms of any breakout moves are not seeing a strong follow-up. So the problem here is one could still like a Tata Steel for some upside, but it's a difficult trade given that we are not seeing sharp follow-ups. Now this is a high beta sector. We've generally seen when they break out, you get a good 5 to 10% move very quickly, which is not happening. We are seeing some bit of a recovery in a lot of commodities as such. We've seen iron ore make a little bit of a bounce back over the last 1 week, but would be avoiding the space purely because the follow-up action is not interesting.
Okay, I'm just scanning through some more stocks where instead of a breakdown or breakout happened. And one such stock, Kunal, is Bharat Forge, above the 200 DMA. Finally.
Yeah, finally. I think I was actually using that word finally because the stock was due for a breakout as such. Most of the other peers they've actually gone into a very strong uptick mode. Bharat Forge surprisingly for the last 2 weeks specifically was going into a very shallow kind of a rally. So it was a very mild uptick for the stock. Yesterday's move indicated a strong breakout in the charts, breaking past about the previous swing highs. I think around 805, 808 mark on the spot levels. But more importantly, it's completed a double bottom pattern on the daily chart. So it took its own time to try and consolidate and break past about the previous size of 800 approximately. But then I think after yesterday's move, it reinstates the fact that this possible double bottom pattern gets completed. So we could now be looking at a potential target of at least 50 to 70 points on the upside for Bharat Forge, and that should probably take the stock higher to almost 860 to 880 levels.
I'll go back to NBFC stocks. And yesterday, post the entire post what happened in the entire space, the reversal post credit policy was actually quite stark. Piramal, L&T Finance, Mahindra Finance, all of them reversed very, very sharply. Sandip, are we missing on some fine print in the credit policy? Because there's nothing which has come to my attention which warrants such a sharp reversal in some of the NBFC stocks.
No, there's nothing in that. So it's just that whenever the trading or short-term positions get too intense in a particular stock or set of stocks, then we see such moves because the short-term players who don't really know why they are buying or selling tend to sell and buy. So I think that this is a regular phenomenon. I don't think we should pay too much attention to it.
NBFCs, because interest rates have peaked out, credit is still strong, and you pretty much now know that which way the wholesale rates would move. And that is the time when NBFCs do well. When the cost of liabilities, it gets fixed and growth is still strong.
Yeah, I think if the banking or the financial sector holds through its asset quality in a interest rate upcycle, then typically it should do better. And I think that's a very strong position which the Indian economy has and which most people fail to recognize, that you have the financials in such a strong position with record low NPAs and buffers in their balance sheet and high capital adequacy ratio across the board, that it can help fuel economic growth for a longish time without even them having to raise equities, raise capital. So I think the financial sector is in a very good health.
Right. Thanks so much, Sandip, for joining in and sharing with us your outlook on the markets. Let's move right on then and quickly look at the pre-open rates this morning and what is it indicating. Around the 18,600 mark is where the Nifty is, and you've got the Sensex down about 170 points. What are the mid-cap strategies from our chartists? And Kunal, what's on your radar today?
I'll suggest a buy on Havells. That stock relatively outperformed compared to most of the other peers. It's still closed at a positive territory, trading about 13 1350 mark, so would suggest a buy. 1400 as a near-term target for Havells and stop loss at 1334.
All right, watch out for Havells in trade today. What about you, Nooresh? Run us through your top mid-cap bet.
So that would be a buy on Tata Chemicals with a stop loss at 980 and a target price of 1100. The stock for the last almost 4 months has been making that attempt around 1020, 1030 mark. This might be the fifth attempt. Range contraction here could be a triangle breakout going forward. It had seen a volume spike 3-4 days back and it has held on to those levels from that day. So expecting it to break eventually above 1020 and make a quick move. So a risk reward trade here with a small stop loss at 980.
You have it, Tata Chemicals. That's what Nooresh is flagging off for the day. But let's move on then. Some of the other news for Tafat headlines. The former US President Donald Trump has been indicted over 7 criminal charges in connection with several classified government documents. Trump himself disclosed the indictment in a series of social media posts. He's been summoned to appear in the courts next week. Do remember, this is the second time in the recent months that he has been criminally charged. Moving on to the EV space, and following rival Ford Motor, General Motors will also be accessing Tesla's EV charging network and technologies. Under the deal, the company will have access to 12,000 of Tesla's fast chargers and the Detroit automaker's EV charging app starting next year. Both shares of General Motors and Tesla were up in trade. Meantime, the Canada wildfires have adversely impacted quality of air across the US, and this is going down as far south as New York. The city's air quality is the worst in the world after the city was blanketed in an orange glow. At least 13 states have issued air quality alerts, impacting an estimated 115 million people. Meantime, the Prime Minister Narendra Modi had a telephonic conversation with the Saudi Prince Mohammed bin Salman, reviewing multiple bilateral and global issues. Modi also thanked the Saudi Crown Prince for his support during the evacuation of Indian nationals from Sudan via Jeddah. And tennis legend Novak Djokovic will be playing French Open semi-finals on Friday. That's today. The 36-year-old will be facing Spain's world number 1 Carlos Alcaraz, and this will be the second time that they face each other in their respective careers. Remember, Djokovic is sharing the 23rd Grand Slam record with the King of Clay, Nadal, who is currently out of the tournament. And staying with sports, let's get you an update on the India-Australia World Test Finals. And it's the end of day 2. India stands at 151 for the loss of 5 wickets. And Australia's batting masterclass and subsequent bowling saw India's top order collapse like a house of cards. Both India openers were sent packing to the pavilion with only 30 runs on the scoreboard. India still trails Australia by 318 runs. And meantime, India is all set to hold the Miss World 2023 pageant. This is actually coming in after nearly 3 decades. The 71st edition of Miss World will take place in November this year. The final dates are yet to be declared, and the last time India hosted the international pageant was in the year 1990.